that we bought up about a month ago, maybe a month and a half now, and we said, look, it looks like the NASDAQ in comparison to the S&P is bottoming. And this is a huge, huge channel. Now, if we scroll down to the daily and we actually get into the current price action, take a look here. We just made a new high. So we just made a new high ahead of the numbers as terms of a ratio. What's this look like? Some people will be saying it looks like a Wyckoff. It looks like a nice accumulation base. I would agree with you in most cases. It does look like tech is doing better than the value right now. We did the charts on that in the previous video. Go back and watch it if you haven't already. And I think it's a pretty interesting and cool zone for us to be watching. Certainly shows us that the movement currently is towards the NASDAQ. Let's move over to the DAX. It's teetering on its support, finding the best level of kind of demand it can. That is, buyers are coming back in, but realistically, it's quite weak. And that's because this is not really a technology market. This is more of a value market. We've got a lot of finance, a lot of energy, a lot of those types of metals, those types of engineering stocks, all sorts of things in the DAX. So this particular sector here is still very sick. And I think that we can watch the Eurozone here a little bit to see what's really happening underneath the hood from the perspective of everything that isn't tech. And of course, then we can make some better decisions based on that. Let's move over to the NASDAQ. It broke through our downward trend line, which is definitely a positive sign for it. However, we're at resistance ahead of the jobs numbers. Expect this resistance to be a big play here. If we get through this level, where do we go? There's a real potential that we move back up to 12,700. Wouldn't that be a cool level to be at ahead of earnings? Remember, the market is technically an optimistic thing. For anyone that doesn't know, the stock market actually goes up like 59 to 60% of the time. That is, if you went and bought every single day, 59 to 60% of the time, you'd be right. Now, that's a pretty interesting stat and actually means that it's probably better than some people's trading skills out there, unfortunately. But that hasn't happened this year. I think it's been more like 40% bullish this year in 2022. It's not always like that. But when we go over here and we consider, okay, we're optimistic, let's say the market's optimistic coming in, we end up here, let's say 14th or 15th next week ahead of the earnings. Well, couldn't that be a very logical scenario? I mean, obviously we're at resistance. Bears are going to try to push it through down here and get it down. But could we be at a point like this, testing this level here ahead of the earnings? I think it's a very possible scenario. And certainly if we breach through this big resistance here in the next 24 hours, maybe next week might have even more ramp in it. It certainly seems like retail traders are incredibly negative still on this market. And until they get positive, often markets will not drop. That's a big part of it. You know, if everybody's positive, then we've got to be worried. If everyone's negative in retail, then we can probably feel a little bit better. Remember the Warren Buffett saying, fear and greediness. We need to go through those steps. Let's look at the SPY. SPY hits basically a resistance, a little bit weakened because, of course, everyone's moving into tech, and there's more than just tech in the SP500, but it rallied back up, kind of hit a resistance. We're not quite on the trend line down yet, but we still have this huge gap that we could be filling. So a very important 24 hours here. We're at the resistance. We've been correct so far this week with our bullish bias here in the markets short term. And I'm hoping it's continuing on. There's no signs just yet to say resistance is going to be bearish. It's just resistance at this point. So we haven't seen the signs of turnaround just yet in these markets. Let's look at the futures market here at the time of recording. Obviously, we're just coiling here a little bit, finding a bit of base. Some people will take this as a double bottom or a triple bottom. They'll take the distance, they'll extrapolate that out, and they'll say, look, the best we can hope for is 39.25. I'm just going to say, let's find out what happens with the non-farms jobs report. I could easily see it do this, bang, then bang, like that. Basically move down initially, scare everybody, and then grab liquidity and move up. That's certainly a very logical conclusion. For bears to feel really happy in this market, there's a simple place that you want it to break underneath. Our defended zone. 37.40. Remember when gold broke our defended zone? It's fallen down significantly past that. I would say there's a lot of orders sitting behind here. And this was a huge amount of manipulation by Wall Street to pick positions hopefully into a little rally here. Let's find out if it's true. Watch our weekend video to find out more. S&P 500, we're coming into the options expiration day. It looks like probably both of these aren't going to make too much money. Basically, max pain sitting at 380, which is underneath the current price in the market. So, of course, maybe they might want to push it down to that point. Not going to use that as a definitive yes or no. I don't know. Neither do you guys probably. 410 here as a resistance level. So this is the call levels. And then we've got that 370 for the potential support. And everything in here is just a joke. We don't know. There's no helping hands there. So if the market does rally, are we going to hit a 410 today? I doubt it. That's probably not going to happen during the US Friday session. But yeah, not too much help here. Where the help does come in maybe is the 15th. So on the 15th, you'll notice that we've got a max pain sitting at 393, which is, of course, above where the market is right now. We have quite a lot of 380 puts. So maybe there's some expiration going on here. And if you look at the puts moving forward in the next couple of months, there's so many sitting around 350. It's really interesting, and we'll continue to follow that story as we go. Bitcoin, nice little rally here, good break. Lucky for us, we kind of started talking about this being a fairly bullish kind of thing. Obviously, moving with the market at this stage because the NASDAQ, because the Russell 2000 are up, sentiment's coming back into the crypto market. We still have the danger zone though. So be very, very careful around 23,000. If we do breach 23,000, we could move very easily up until the 28s. And I think the 28 will be where a lot of people start to look to take some profit, get out of the thing, that type of stuff. Be careful here in Bitcoin. It's still stuck between two zones. And as we know, it tends to do something like that and often has like a trap in it before it really rebounds. So care needed, but very strong, kind of nice breakout, great candle formations down here. Congrats if you're in that and feeling good about it. If you haven't already, come and follow us at FX Evolution is the handle. So at FX Evolution. You can follow us on Twitter. Always great to have you there. If you want to join our private community, you can do so. Links in the description down below. And of course, you can also join our public Discord with 10,000 members in it. Link in the description down below as well. For the calendar for the week ahead, it's really just about the big ones. And if we go over here, we'll see it's the non-farm payroll change. Friday 8th, this is basically 8:30 a.m. New York time. And when we go into the next week, check this out. We have a whole bunch of CPI numbers coming out. Then we go into PPI. Then we go into core retail sales. Oh, what a blockbuster 3 days that's going to be. I'm sure a lot of you are probably looking forward to the volatility that's going to bring. So if you haven't already, definitely check out the special offers down below. Remember, you have until the 12th of July if you're Australian and you're interested in opening up with Tiger Brokers to get the free Apple stock and other stock offers. Don't worry if you're from anywhere else in the world, there's plenty of opportunity down there as well in terms of special offers. And if you just want to check out that awesome platform, which has a great economic calendar and some extra features that we'll be looking at soon, you can do so. Thanks so much for watching, guys. Subscribe. Smash that like button if you enjoyed today's video. We'll see you on the weekend on the other side, and good luck on Friday. Bye for now.